It's 10 a.m. here in Lagos. Welcome to Business Morning and good morning. I'm Chimeze Obi Iwago.
Good morning. You're welcome. I'm Ini John Mekwa. And we start with the IMF. IMF, the International Monetary Fund, on Tuesday upgraded its global economic growth forecast for the second time in 3 months, while warning about widening inequality and a divergence between advanced and lesser developed economies. In its World Economic Outlook report, the IMF says that the global economy will expand by 6% this year, up from 5.5% pace estimated in January. That would be the most in 4 decades of data, coming after a 3.3% contraction last year. That was the worst peacetime decline since the Great Depression. The fund is also projecting a 2.5% growth for Nigeria's economy from the 1.5% announced in January. A further breakdown on Africa and country-specific growth outlook will be given later this week at the virtual spring meeting by the director of the IMF's African Department.
Meanwhile, oil prices edged higher this morning on the prospects for stronger global economic growth amid increased COVID-19 vaccinations and a report that crude inventories in the United States, the world's biggest fuel consumer, fell. But optimism over talks between the United States and Iran, an impending increase in supply by major oil producers, capped gains. Brent crude futures for June rose by 24 cents to $62.98 a barrel, while U.S. West Texas Intermediate crude for May was up 20 cents to $59.53.
And here in Nigeria, despite technological advancements and the changes occasioned by COVID-19, most women are yet to take advantage of the current situation to enhance their livelihood. This is the thrust of discussions at the First Bank annual First Gem Conference, which was held in Lagos. The event offered the platform where women into business are challenged to create advantages for themselves through education and engagement in prospects provided by the technology. Let's see the meeting.
Thank you very much. Participation at the 4th edition of First Gem Annual Conference is virtual, with only a few participants, including the chairman of First Bank, Mrs. Ibukun Awoshika, and top management staff present in the physical venue.
A round of applause for him. Thank you very much.
The Managing Director and Chief Executive Officer of First Bank, Adeshola Adeduton, explains what the conference is all about and the bank's approach in supporting women to create wealth and become financially independent.
Her bank, First Bank, provide access to resources and interactive workshops and advisory that help women to make informed financial decisions and build wealth management competences.
Speakers from within and outside Nigeria lead discussions on the current state of the global economy and how it impacts business decisions, what investors want, and negotiation as a tool for winning in business and career.
COVID has speed up a process of changes that we didn't have, that we expected to have, but years ahead. So COVID has been a sort of a stress test in all business.
Investors are beginning to look for investments that take advantage of technology one way or the other.
Online play, meaning that there's a diaspora who is interested in your product. That diaspora, whatever may have happened to them, they are not poorer in Naira terms. In fact, they are richer in Naira terms. You may necessarily not earn Afex from them, but you earn more Naira from them. And that also leads to an expansion of your market.
The icing of these thoughts is a challenge from the chairman of First Bank, Mrs. Ibukun Awoshika.
Information is power. Knowledge is key. Your ability to understand what that information represents and to bring it home into how it impacts your business is key.
During the event, 5 shortlisted participants get the opportunity to pitch their business for a chance to win seed fund to kickstart or support their business. At the end, the judges pick Edu Cyclist as the first prize winner of 500,000 Naira. The 2 runner-ups also received 350,000 and 150,000 Naira. This year's First Gem Conference concludes a series of activities organized by First Bank to celebrate the roles and successes of women in the society. Through its product, First Gem, the bank says it has successfully empowered women in states across Nigeria and the United Kingdom.
Well, today is World Health Day, a day set aside for global health awareness, and being celebrated at a time of pandemic highlights the importance of adequate health care to the growth of any economy. And when it comes to health care, of course, Nigeria is lagging its comparable African neighbors in terms of expenditure and, of course, access. And so this day brings to mind how investment can be driven in the healthcare system. And joining us now to talk more about this is the chairman, Lagos Chamber of Commerce and Industry Medical Group, Dr. Niyi Oshamiluyi. Thank you very much for joining us.
Thank you so much, Chimezia and Imi, for having me this morning.
Thank you for joining us.
All right, today is World Health Day. Before you, what does this mean, particularly as the world deals with the coronavirus pandemic?
Thank you again for having me. So the theme for this year is building a fairer and healthier world. And in the context of COVID-19, you find people, there were lockdowns. There are people that are disproportionately affected by these lockdowns. You find out that people, because of where they live, where they are born, they have challenges with healthcare. So World Health Organization, WHO, is saying, our leaders, how can you make their lives better? Access to education, better housing, because all these social factors, they're social determinants of health, they influence the health of people. So that's pretty much what WHO is doing for World Health Day 2021.
Well, obviously, like you said, with COVID-19, it became more obvious the issue of infrastructural gap, the need for healthcare, primary healthcare in the case of Nigeria and all that. And I think it becomes even more obvious that the government alone cannot handle this. So how do we now attract, attention, especially investment from the private sector or otherwise, to close this gap?
All right. Thank you so much. First of all, you've said a very critical thing. Government alone, and across the world, government alone cannot fund healthcare. And it's more obvious in Nigeria when you look at last year's budget and this year's budget. So this year was, because of the pandemic, made the greatest statement to say health budget has to go up. So if health budget doesn't go significantly up in 2021, when can health budget go up? But you see just a marginal increase, just about 4% of budget, of the total budget, the total envelope is what is budgeted for healthcare.
What does that tell us? Does that show that the government is even giving any serious attention to this all-important sector? I mean, you operate
in the health sector. So I'll say it is what it is. Government says, of course, it has to service debts. Government says, and it's obvious, decrease in revenue. So government pretty much cannot give what it doesn't have. So these are statements, these are clear statements that there has to be closing of the funding gap. It makes a clear statement that the private sector needs to be involved. So it is what it is. Pretty much government doesn't have the money to increase funding of healthcare, and it's across all these sectors.
So how can the private sector begin to take this opportunity that COVID-19 perhaps has presented?
Brilliant. Thank you so much, Chimeze, for that question. So the private sector, prior to COVID-19, private sector has been doing a lot. Again, private sector, the COVID-19 has exposed a number of opportunities. You will see what CACOVID is doing, supporting the government. Something that, again, needs to be done more is that private sector needs to also partner with private health sector. That's something that I think we want to see. So PPPs have been going on across Nigeria. That's a very, very important way of private sector involvement. Where in Lagos, although you might say this is Ogun State, LUT as the biggest, largest cancer center in West Africa. That is a PPP, funded or supported by NSIA, Nigerian Sovereign Investment Authority. So those are examples of private sector involvement in healthcare.
You also talked about private sector collaborating with private sector. Now, how can that be explored? Because if we're looking at the government and it seems perhaps we are doing the much that we can, then let's look the other way. How can that be explored?
Okay, so that is something that I think it's really important, needs to happen. So there's an incentive for the private sector, banks, telecom, oil and gas, to support government. Possibly, it might attract patronage, it might attract tax holidays. But I think what needs to happen more is private sector, banks, telecoms, etc., supporting private health sector, pharma, hospitals, medical equipment. And I'll give a very example during the COVID, we're still in the COVID era.
Yeah.
One of the isolation centers that was set up in Ikeja GRA by somebody in the private sector, so it was supported by people in the private sector. So private sector partnering with private health sector. So equipments were donated, and that isolation center was set up in Ikeja GRA. Channels, for example, channels can say they want to support hospitals, and for example, in those hospitals, don't watch CNN or Al Jazeera. I'm just giving an example. So that is an example of private sector supporting private health sector. That is something that needs to happen more.
We're having private sector, and private sector is the issue of pricing, which is why we always put in the government, because health is one major thing. So if you have private sector and private sector, doesn't it take the price out of the reach of the ordinary man?
Affordability now, because that is key. Healthcare affordability is key, because when you have, it's just like having education in the hands of the private individuals. You have to pay through your nose to send your child to school, and so you have the healthcare system, which is now becoming very, it's now being channeled to private sector. See a lot of private individuals or in their hospitals, and then you find that even an ordinary Nigerian can't even afford to take his or her child or himself to the hospital for treatment. How do we deal with that? I mean, healthcare affordability is very key.
Without a doubt. So Chimeze, this can potentially bring costs down in some respects. So for example, an oil and gas company says, I'm supporting this Nigerian pharmaceutical company, private sector to private health sector, and says all your anti-malarials, right, will come branded with maybe our logo, and the cost comes down, right? So that's private to private. For example, an hospital, a private sector player buys equipment and says that room, that building should be named Channels Building, right? So you get brand awareness. Companies come to advertise on channels, right? So why can't they say, so that there's brand awareness for them? So they brand all the hospital, and they say that care is supported by this IOC or by this telecoms company. So potentially cost can come down. I know Chimeze is particular about cost. Yes, such partnerships, such collaborations can bring about reduction in cost.
Where does health insurance come to play here?
Excellent. Thank you once again, Chimeze. So health insurance is really, really, really important. When we look at the health sector, I usually like to say there's a demand side of healthcare, there's the supply side of healthcare, and there's the environment where we all operate, when you talk about ease of doing business. Health insurance is critical for developing the market, which is the demand. So you're an investor, if you're bringing in money, of course, ROI, you want return on investment. So health insurance is what can deepen the market, make people be able to pay easily. You can say off-takers. So health insurance is critical.
So what about the individuals? Talking about skills now, I mean, we have some brilliant doctors, who work here, and now look at what is happening in the health sector. A lot of them gone on strike, and then you find a lot of them wanting to leave the shore to, for greener pasture elsewhere, and then you have a lot of people, traveling abroad for health tourism. How do we begin? Because human capital development is key. And I think if we invest in our medical doctors,
without a doubt,
the nurses, that would also help. But don't you think so?
Without a doubt. So I'll tell you a joke. I watch football a lot, and I joke with people. If Messi and Ronaldo were Nigerians, they probably wouldn't play for Nigeria. They probably wouldn't play Nigeria. They're probably playing for another country. And it's sad when you look at it. And that's what at times happens to the best of us. Those we have Nigerian doctors all over the world, the US.
Doing very well. And we're not encouraging them here. Like, I mean, it's so sad, really.
People that are returned, some that are returned are expressing their frustration. Some that have tested the waters, put their leg in, some have run back. So again, some of this, you look at the environment, and government has a role to play in this environment, making giving an enabling environment, making it easier to do business. So if you're talking about investing in the supply side of healthcare, whether you're building an hospital, building a pharmaceutical company, you're not going to operate in isolation. You're going to operate in an environment which is regulated by government. And hopefully we'll be able to talk about that more.
Now, you are the chairman. You are the chairman of Lagos Chamber of Commerce Healthcare Group. It's an advocacy group. So what kind of advocacy do you do? You're a medical doctor. You play in that sector. You know the challenges in that sector, and you know the importance of attracting investment. And then being the chairman of an advocacy group, what conversation have you been having with government?
Thank you so much. So let's assume we've got all the money to bring into supply side. We want to build hospitals. And indeed, people are building hospitals. People are building pharmaceutical companies. We operate in an environment. In that environment, you've got government. You've got customs. You've got NAFDAC. You've got SON. So NAFDAC, fantastic organization. They're safeguarding our health, right? But at times, they don't totally understand this sector. And there's no problem at times when you don't understand something. It's not unusual. You need to try and gather or gain the knowledge. All this influences the cost. So, for example, with customs, you have people, some of our members, bringing in ventilators. Ventilators, they're critical for people that can't breathe.
At a time like this.
With COVID and things that have difficulties in breathing. Now, because a ventilator, for example, contains parts like compressors, right? Things that should be waived, right? They're being told because it contains that's one of the components of a ventilator. So they're being told they need to pay the same tax because compressors are found in cars, right? So those are part of the challenges. Also, you find duplication of responsibilities. Things that have been passed by NAFDAC, you are being told there's opacity, right? There's no clarity. At times you don't know what to even do, right? And you find we're talking about reducing medical tourism. So how are you going to be able to reduce medical tourism when some companies don't even want to touch Nigeria, right? Because it's difficult for them. Some of this equipment, we don't manufacture them. CT scan, etc., etc. So when there's uncertainty with government, there's uncertainty of COVID, and there's uncertainty with government, nothing is clear. There's no clarity. Haphazard. It doesn't do well for investment.
So now, how do we relate this conversation we're having with what is going on now, which is that the resident doctors have been on strike and it doesn't seem like we see the end in sight? How do we're talking of the health sector and in a pandemic for that matter?
So, it's really, really sad. I know Channels has had the president of NAD earlier, the president of NMA and etc. I wouldn't really talk too much on that, but as a citizen of Nigeria, right, it's deeply saddening. It's deeply saddening why we have to, come here again. I personally feel if there are agreements, that have been signed probably at a point in time, those agreements need to be respected. Beyond being respected, those things need to be implemented.
So looking at this sector now, any hope? What should we be expecting? I mean, having been talking to private sector and talking to government, what do you hope to see?
All right. So supply side, that is our work. We want to do supply side. We hope demand side. Government needs to fix demand side in terms of health insurance. Health insurance is at about 5%. It's been like that for a while. Government needs to fix that. We need to scale up health insurance. More people need to be covered because that, activates the market when people don't have to think about paying when they want to access care. So demand side needs to be fixed. In terms of health insurance, HMOs, for example, one thing, so this might sound a little bit controversial, but what I think regarding HMOs, there are too many of them. I think there has to be consolidation. There are over 50 HMOs. I think there needs to be consolidation, making bigger, stronger HMOs that can innovate and expand the market.
And the doctors should be paid. Definitely,
Chimeze,
right.
definitely.
Thank you very much,
Thank you so much.
Dr. Ni Oshamilui. Thank you very much for sharing your time with us.
Thank you.
Okay, we'll take a break, and when we come back, Afex Commodities Market is next. And for the first quarter of this year, about 3.2 million contracts were traded on the Afex Commodities Exchange, valued at 55.6 billion naira in 1,334 deals. For details, here is Michael Martin, Portfolio Manager at Afex. Hello, Michael. Good morning.
Hi, Chimeze. Good morning. Thank you for having me once again.
Good morning. So you are looking at activities in the first quarter. Bring us up to speed with that.
Yeah, so as opposed to what we usually do on the commodities market up there, we're going to be going through what has happened on the exchange over the course of the first quarter of the year, and that's considering the months of January, February, and March. And I must confess that we do have a fair number of data to go through this morning. So without further ado, let us just dive in. So the total number or the total value of contracts traded on the exchange over the course of the first quarter of the year is about 55.6 billion naira. And also the total number of contracts traded on the exchange over the first quarter of the year totals around 3,158,386 contracts. The total number of deals that we also traded in the first quarter of the year totaled around 1,334 deals. With regards to the indexes, first of all, we have the ACI, which is the Afex Commodities Index, comprising of commodities like maize, soybean, paddy rice, and sorghum. It started the quarter at around 320.58 points and then ended the quarter at 392.23 points, showing a quarter-to-date gain of 22%. Over the course of the quarter, the highest that we saw the ACI gain was 406.35, and the lowest we saw over the course of the quarter is 319.33. As opposed to just the ACI, we also have the AEI, which is the Afex Export Index, comprising of commodities like cocoa and ginger. So it started the quarter, and that's on the 1st of January, started the quarter at 142.67 and ended the quarter at 159.35, showing a gain of just over 12%. The highest that we saw over the course of the quarter is 162.75, and the lowest that we saw over the course of the entire quarter was 142.67. And moving on to the volume of contracts traded on the exchange, as you would see by the chart in front of you, maize is the most liquid commodity on the exchange, trading almost 3 million contracts over the course of the first quarter of the year, accounting for more than 93% of all the contracts traded, of all the volume of contracts traded on the exchange. Secondly, we have sorghum, which traded 84,771 contracts. And then thirdly, as regards the volume of contracts traded on the exchange, we have paddy rice, which traded 27,162 contracts over the course of the first quarter of the year. I think the least traded commodity on the exchange would be sesame. Moving on from that, we have the commodities. We have the commodities in focus. So moving on, we have maize, which started the quarter at 16,099 naira per contract and ended the quarter at 19,400, showing a gain of just over 21% over the course of the first quarter. The highest price that we saw over the course of the first quarter was 20,572, and the lowest price that we saw for maize over the course of the first quarter is 16,099, which is the same price at which it started at the quarter. The next commodity in consideration is soybean, which started the quarter at 19,830 naira per contract and closed the quarter at 30,750 naira per contract, gaining more than 55% over the course of the first quarter of the year. I mean, if I must confess, soybean has been on fire this year, as opposed to, in comparison to all the other commodities under consideration. The highest that we saw soybean over the course of the first quarter was 31,650 naira per contract, and the lowest that we saw over the course of the first quarter is 18,523. The next commodity under consideration is Paddy Rice, which started the quarter at 19,250 naira per contract and ended the quarter at 19,695, showing just a marginal gain of just over 2%. The highest that we saw Paddy Rice over the course of the first quarter of the year was 19,700, and the lowest that we saw for Paddy Rice was 17,005 naira at 17,005 naira per contract. The next commodity under consideration is sorghum, which started the quarter at 15,033 naira per contract and closed the quarter at 19,195 naira per contract, showing a gain of just over 28%. And the highest that we saw sorghum over the course of the quarter is 19,395, and the lowest that we saw sorghum over the course of the first quarter is 15,033 naira. Another commodity under consideration is 98,000 is cocoa rather, which started the quarter at 98,214 naira per contract to end the quarter at 103,400 naira per contract, showing just another marginal gain of just over 5%. The highest that we saw the commodity over the course of the first quarter is 104,333, and then the lowest that we saw cocoa over the course of the first quarter is 98,214. The other commodity that is also under consideration would be ginger, which started the quarter at 73,767 naira per contract to close the quarter at 87,862 naira per contract, showing a marginal gain, or showing a gain rather, of just over 19%. The highest price that we saw ginger over the course of the first quarter was 91,653 naira per contract, and the lowest price was 73,767, which was the same price at which it started the contract. And lastly, for commodities, we have sesame, which started the quarter at 45,000 naira per contract. They also end the quarter at 47,617 naira per contract, showing just a marginal gain of 6% quarter to date. The highest price that we saw sesame over the course of the quarter was 47,617, and then the lowest price that we saw sesame over the course of the quarter was 44,780 naira per contract. And then lastly, but definitely not least, we have the fair trade exchange traded commodity, which started the quarter at around 11,832 naira per contract and ended the quarter at just over 14,000 naira per contract, showing a gain of just over 18%. The highest that we saw the contract trade, or the FETC trade, over the first quarter was 14,306 naira per contract, and the lowest that we saw the FETC trade over the course of the quarter was 11,365. So, like I said, we had a fair lot of data to run over. And so that's essentially all of what happened with the commodities on the exchange over the course of the first quarter of the year, and also with the fair trade exchange traded commodity. And like we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get involved trading commodities, you can download our COMEX app. It's available on Android and iOS. And you can also follow us on all our social media platforms at Afex Nigeria. So, Chimeze, that is all of what happened in the first quarter of the year on the commodities.
That was a lot. That was a lot of data, like you warned us, Michael. Thank you so much for sharing it with us. Well, enjoy the rest of your day. But to talk more about this and the factors that might affect the market in the new quarter outlook is the Chief Executive Officer, Ayodeji Balogun of Afex. Good morning, Mr. Balogun. Thank you so much for joining us. Well, how would you describe the commodities market in the first quarter? I know Michael just gave us the figure, but could you put some flesh into those figures?
I mean, one word is volatile. We've seen maize surge by season to date about 41%, 21% precisely January to date, which is marginal comparing that this is just 90 days. And knowing that we're in April, we still have about 5 months to go before the new season. If you look at soybeans, has even been a lot more, with a season-to-date gain of about 80%, and January to date about 60%. So we've seen quite a lot of increase. The trend has been upward, and I think that has also been generally inflected on the food basket inflation and the general inflation figure that we see in the country. The interesting part is that this is not the coupled with what is happening in the global trend. Interestingly, maize international prices has also gone at about 40% from November till date. So we've seen this increase gone both locally and internationally, almost correlating for maize. We've seen soybeans that traded at the beginning of the season below parity price has seen that correction, and it's adjusted to very close to around parity price today.
Yeah, right. Now, looking at those numbers that Michael reeled out there, there's a fair bit of some kind of correlation with the commodities market, to which you would expect all commodities to move in the same direction. However, is there any reason why the ACI, that's your Afex commodity index, outperforms the Afex export index within the same quarter? And what factors would you say are really responsible for the performance recorded amongst the commodities in the quarter under review?
A couple factors. First, the export crops are harvested earlier than the staple crops. So ginger, cocoa starts their season a bit earlier than maize. Cocoa starts trading from July, early August. So you're seeing the end of their own season in Q1 versus maize and soybeans that start trading in November, December. So you're still in the active trading months for those seasons. The second is that if you also look at the full data points, you'll see that cocoa and had a correction. So you had a correction in maize prices. So end of season last year, maize traded at about 195, 200,000 per metric ton. And then by the time maize started at the beginning of the season, it started trading at 125,000 with the new crop onset. So there was that correction that happened, giving it room to then rise. So today we're still trading maize at below the peak price last season. When we compare that with cocoa ended last season at about 800, 900. It started at a marginal difference of about 750, 800 this year, but had gone as high as about 1,000. So the price this year is higher than the prices last year. So that it didn't have that same correction that we had in the maize crop.
But one of the things that Nigeria is dealing with at this time is inflation. So how well did the commodities perform as a hedge against inflation in the country, and how will inflation potentially impact the market going forward?
So if you had invested in the FEEC in November, December when it was listed, you would have had about 40% gain. If you had invested in maize, you would have had about 40% gain as well. If you invested against soybeans, you would have had about a 75% gain. So if you look at it both from a dollar hedge as well as an inflation hedge, it is still the most performing asset class in the entire capital market. And then it is real. One of the great things around commodities is that because it is tied to physical commodities that are consumed annually, and it is the price of what the industrial users use, you have that natural correction that happens within every cycle. Like I said, maize, for instance, reached the peak of 195,000, and at the onset of a new harvest, it came down to 125. But based on current trend, we're seeing that price adjust itself. So we're still mid-season. We still have Q2 and Q3 to go, about 6 months to go before the new crop happens. And we're still going to see some of these things trend continue to play itself out. A crop like soybeans, depending on where we see, but from where we look at data, we may still see about a 10% increase between now and end of the season. Maize may still go as high as about another 20%, depending on where we see. Part of what we've also seen, in terms of managing inflation has been the activity of some of the regulators to ensure that key players in the processing, the food and beverage, and the livestock sector can access some of this raw material in a price-controlled environment. So that's happened, and that's also helped to make sure that the price increase is not fully passed on to the consumer.
So what does Afex have planned out for the markets this quarter?
It's an exciting quarter that we are on. The first, we are excited about the input program. We're going to be doing the all-time largest input financing. We hope to finance 850,000 farmers across about 12 states this year. That's exciting to us because it's something that has tremendous impact directly to the farmer and their households, but also ensures, the food security of the country. To put it in context, last year we did 35,000, and the total number that we've done for the last 5 years that we've operated is about 120,000. So this year alone, we should be exceeding the total number of farmers that we've given loans to over the first 5 years. So that's quite exciting. We are on the investment side going to be issuing instruments that will finance the export sectors. So we are excited about being able to provide liquidity, and that is very much needed for the country, understanding the need to increase the foreign exchange earnings of the country and the non-oil foreign exchange primarily. So we will be financing a number of the export players, providing asset-backed financing, warehouse receipt financing, and that's the first time we're doing that. The third part of what we're also pushing in preparation for the new harvest in October is a market where any trader, any feed mill, any food processor, any rice mill in a part of the country will be able to, from his mobile phone, buy the commodity they want to use. So you can log into the app, you can trade, and you can have a truck of maize or rice or soya beans delivered to your factory. And you could also, on that same mobile phone, access financing to support your trade. So that's,
all right, thank you so much. We really have
exciting.
we really have to stop there. Ayodeji Balogun, the CEO of Afex, thank you so much for sharing information with us. We really appreciate it. Well, we'll just take a moment and we'll be right back.
Awesome.
All right, let's take a quick peep into the market. Eddie is standing by to give us all the updates. Eddie, the equities market didn't really start off well for the week.
Well, Chimi, you're right. I think investors rested and had so much fun over the holidays, and they weren't really particular about anything going on in the market, and they just wanted to take profits.
Interest is in the fixed income market.
Exactly, because we've seen yields in that space continue to rise. So I really don't know what's going to be happening, but as long as yields continue to rise in that space, we're not likely to see much activity in the equities market, or hopefully that wouldn't happen. But let's talk to David Adonri, a stockbroker at High Cap Securities, for more. Good morning, Mr. Adonri. Thank you for joining us on the program.
Always a pleasure. Good morning.
What exactly drove the sentiment on the banking sector? That counter was down by over 1%. But unfortunately, we've lost Mr. Adonri. But then looking at the market numbers now, the all-share index was down 0.39% at 38,766.61 points, while we lost about 78 billion naira in the total equity cap. Now, volume and value traded yesterday were lower compared to the last trading session, which was on Friday. We saw 224.59 million units worth 2.14 billion traded in 4,600 deals. And sectoral performance was broadly negative. The banking sector was down 1.67% as we saw declines from Zenith Bank, from Access Bank, from GT Bank. Consumer goods was down 0.39%. We also saw losses from Guinness and international breweries. The industrial goods sector was down 0.52%. We saw declines from Boa Cement yesterday and also from Lafarge, Wapco. Insurance and oil and gas were also down. But I hear Mr. Adonri is back with us. So, Mr. Adonri, what was responsible for the declines on the banking sector? What drove those sentiments?
Yeah, well, the full year results have been announced for most of those banks, and most of the companies that occupy the commanding heights of the market. And so, in the absence of any price-sensitive information, there is actually nothing to stimulate the appetite of investors in those stocks. And a lot of people rushed out of equities into debt to take position in the federal government savings bond recently. So that may also have drained some funds away from those principal securities. So that was probably why we saw a sluggish market yesterday. But apparently, the interest rate at which those bonds were issued did not meet the expectations of investors, because the federal government savings bonds for 2 years and 3 years maturities were issued at 5%, 6% respectively, when people were expecting them to match up with what happened with the Sukuk. So what, therefore, I believe could happen moving forward is that investors can interpret that to be a signal from government to continue the support for equities market by lowering rates on fixed income, so that assets will continue to remain in equity. So we're likely going to see a firmer equities market moving
All right,
forward.
Mr. Donny.
Yeah, okay. Thank you.
All right, Mr. Donny. Sorry to cut you short, but we've run out of time. But thank you for your input on the program.
It's a pleasure.
David Adonu is a stockbroker at High Cap Securities. Well, Chimi, he also just gave an overview of what happened in the fixed income market
from
yesterday.
what Mr. Adori has said there, because the fixed income, the government would still also have to encourage people to invest in the fixed income market. But I'm sure the investors are really looking for a better catalyst that will spur them in the equities market. So investors in the equities market should be able to also gain from there, as well as they are gaining in the fixed income market. I'm sure we'll have time to talk more about that. For now, we'll take a quick break, and when we come back, we do our opening calls to London.
Well, welcome back. We now go over to London, where Juliana is waiting to give us what's going on there. Good morning, Juliana. Welcome to the show this morning.
Morning,
Amy. Breaking news that climate activists have been arrested in London after windows were broken at the Barclays headquarters in Canary Wharf. What are you learning about this?
Yeah, breaking news, breaking windows, Extinction Rebellion are not known to make a silent protest, that's for sure. They did that over the past couple of months last year, but what's happened is 7 women have broken windows outside of Barclays headquarters in the capital, and they have said broken windows is better than broken promises, and that's down to Barclays having a pretty unpopular title of being the biggest financial backer of fossil fuels in Europe. I believe they're the 7th financial backer in the world. And we know that big, large corporations are really trying their best to get out of a dirty business and stop financing fossil fuels development. I believe last year, between January and September, Barclays financially backed about $24 billion worth of investment. And it's not just extreme environmentalists that are not happy about this. With Barclays, shareholders are not happy. And despite the fact that there have been several policy adaptations in their annual general meetings, people are still not happy about it. And I think particularly because at the end of this year, Glasgow are going to be hosting the UN's COP26 summit. Britain obviously are going to be taking centre stage, and they want to make sure that the financial institutions that are headquartered in this city take the first step. And I think that's what those climate activists were trying to demonstrate this morning.
Well, I hope it is curtailed and it ends in a short while. Well, the IMF says that the UK economy will grow by 5.3% this year. Is this in line with economists' forecast in London?
Yeah, pretty much in line. It was a good IMF forecast yesterday. We know that their spring briefings have kicked off remotely. And they were saying that the global economy post-pandemic recovery is on task, and it is going to be stronger than expected. They've certainly taken their hats off to Joe Biden's $2 trillion stimulus plan. The same way with Rishi Sunak. He has obviously spent billions in trying to prop up Britain's economy. So, yes, on the surface, it looks good. I think there are some major concerns about where Britain will be this year. Next year, the IMF forecasts that Britain will have a stronger growth than most of the G7 nations, but because we contracted by 9.9% last year, one of the deepest recessions among G20 nations, as well as having the highest death toll in Britain this year, the bounce back is just not going to be as strong as what Boris Johnson and the Chancellor would glimmer of hope. But once again, another global organisation has saluted the fast vaccination rollout scheme. As it stands at the moment, over half of Britain's adult population has had a vaccine.
And how are the markets reading those forecasts this morning?
Pretty good. The FTSE has started off in positive territory despite last week's flopperoo, the flop flotation of Deliveroo. Their shares are actually higher, up 3%, which is definitely going to cheer those bosses, even though there are whispers that there could actually be a Deliveroo strike at some point today. Protests are likely to take place in York and in the capital city, so we'll keep an eye on that. And just before I stepped in the studio, there were the PMI numbers for the service sector, Britain's most important sector, contributing 80% to GDP, showing a vast improvement in the month of March, up to 56.3, which is a massive surge from 49.5 in February, definitely showing that the service sector is ready to open as the reopening of society takes place ever so slowly in England.
All right, thank you so much, Juliana. Enjoy the rest of your day. Well, now we move over to the crypto space, and Laddie is ever ready to make some money.
Yes, and interestingly, Bitcoin traded for $71,000 on the Korean exchange today.
Should I give a whoop to that?
Interesting, it might be an indicator to show you where the Bitcoin price is going. But other exchanges are still trading at about 58,000 today. Market cap about $1.97 trillion, down about 0.78%. 24-hour volume at $212.47 billion, up about 13% this morning. Bitcoin dominance still going down at 55.14%. Let's talk to Solomon Amunde now. Hello, Solomon. Great to have you.
Yeah, good morning. Good morning.
Good morning. So, Solomon, I know you were part of the previous bull market, and we're in a bull market right now. How should traders be playing this market at this point?
Okay, the way I started trading the market was pretty easy. I started by buying most of the coins that had bottomed in the last bull markets, and it has really paid off well. Most of them have done over 10x. For example, XRP Ripple. We can see what happened yesterday. Ripple moved by over 100% yesterday and day before yesterday. So it's pretty easy. Identify the coins that peaked 2017 and buy them this year, because they too would peak this year. Most of them are still at their all-time low.
So interesting. That means you actually took a risk on Ripple, even though you knew they had SEC issue.
Yeah, I knew it was all about the court issue. That's why it was still low. And right now, Ripple is still undervalued. Looking at it getting to $3 very soon.
Okay. All right. Going into the weekend, what do you see happening to Bitcoin's price?
Yeah, Bitcoin still has to trade sideways for at least 5 days before it can head for $70,000. Right now, it's the alt season. We expect most of the alts to still rally to like 20 to 50% in terms of profit.
And interestingly, Bitcoin traded on a Korean exchange for about $71,000.
Yeah, the demand there is massive, really, really massive, because most persons are hodling. They don't want to sell, that's why.
So how do you make profit from other exchanges if you maybe take your 50K into a Korean exchange? Is that possible?
Yeah, it's pretty possible, but one of the easiest ways to make profit in most of the exchanges without risking much is, for example, you can stake your tokens or you can stake your stable coin and you can earn some other projects that are launching on that token, on that exchange rather, just like Binance. You can stake your BNB or your stable coin, your USDT or your BUSD, and you can earn most of the projects that they are listing on Binance for free, actually.
Interesting.
That's very, very easy.
Okay. All right, Solomon, thank you so much for your time. Always great to talk to you.
No problem. Thank you very much.
Yeah, so let's look at price of Bitcoin, 58K. Price of Ethereum, 2,101, down about 1.62%. Ethereum still bullish, so it's not a bad one to go into. 24-hour volume, $28.282 billion. Top alts, BNB. BNB doing incredibly well, $413, about 6%. Any market's not looking bad.
And then people trading the bull market. But then I would say caution.
Caution.
Yes. Well,
Caution.
Chime, I hope you heard what Solomon said. He just took a risk. Even on XRP that we know they have the
if you're a risk appetite someone, if you're someone that has the risk appetite, your risk appetite is high, it's okay. It's okay to take a risk, but remember, this market is a very volatile market. So keep saying caution, and whatever we say here is not a financial advice. I mean, this is a market we keep tracking, but then caution is the key word.
Invest what you can afford to lose.
Absolutely. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.